Test, 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 test. Let's try this out. Good morning, everybody. I hope you're doing well. I'm just going to be checking, making sure that we have audio. Yep, we're good to go. Okay, perfect. We got audio. I have to do these audio checks because I've broadcasted several times with no audio for a long time. So anyway, a couple things if you don't mind just hanging out real quick. I'm going to get out the links to everybody. So if you want to speak, go. Okay. All right. And then I'm going to get it out on Twitter. So just one moment here. Appreciate it. This is really cool because the video yesterday, what we talked about, played out perfectly. So it's kind of a neat thing, and I'm excited to go over it. So that's basically what we're going to be talking about today. We're going to look at the market, look at some trades that I have set up, and because I think it's important for you to know what I'm trading to a certain extent. So I'll show you what I have. All right, so morning charting broadcast is live. So crypto, coffee, and charts. If you want to speak, we'll do this link here. And then I'm also going to have it. Oops. I apologize. Just another moment. We're going to do a Twitter space as well. It'll be great. So I'm excited. So what is this one called? VPRP? No, VR. So crypto, coffee, and charts. All right, let's go. Start now. Let's get everyone invited. We'll just invite everyone. Okay, we are live. And last thing to do is just pin those links in the Twitter space, and then we're good to go. So thank you for your patience. But it is going to be worth it. We have got a very cool show. This is why we're here. This is what we're talking about. So we're ready. We're good to go. We're all set up. So I've got the comments here. Let me just pop out the comments. It's like I don't know how much of this can actually be set up beforehand. That's the problem. So sorry about that. But we're ready. We're good to go. You can see my screen. What I'm looking at, I am trading the Ethereum USD pair, and I'm doing the perpetual contract on Bybit. So take a look. If you're on Twitter, take a look at the pinned tweet. You can see the live stream. You can also join in and chat. So, but today we're going to go over what happened yesterday. So we were talking about volume profiles yesterday, value areas. Really kind of a cool thing. So let me just do something real quick, and I apologize. I'm still trying to get over this sickness. So, all right, if we go, so we're on the hour chart now. Okay, so we want to just take yesterday. So May 2nd. Okay. Oh, did we get a click there? Let me get this. May 2nd until the 3rd of May. So we want to go right there. Okay, 24 hours. Okay, 24 hours. What we had, let's see. So it's so weird because it changed on me, I noticed. Because it's set up perfectly. Oh, no, that's right. So for some reason I had a little bit lower, but this is what we can expect. All right. So with the volume, so there's this 80% trade, okay? And I'm wondering why it's showing it different now. Um, was it for the 30-minute? No, it's the same. So that's fine. That's fine. We're still likely going to get this. So let's see if it plays out because I thought that it had, maybe I just had the wrong levels marked. I could have swore it was a little bit higher. It was 2817, but clearly that's not accurate. Anyway, so when we're looking at the volume, this is what we went over yesterday. So this little this graph that I just overlaid on the candles, this is a fixed range, and this is a value area profile, right? So basically between this fixed range of candles, it'll tell us this red line is where most of the trading happened, right? These colored candles that are obviously going horizontal, um, the colored area is where 70% of the trading took place. And then these darker areas where there's still candles, but they're darker, that's the other 30%. So the majority of the trading took place right here, right? Which is like in this area, which is really cool. So it kind of gives you an understanding of where people are finding value within a fixed range. And there was a trade. So if you open the day, so if you see, like we opened the day, let's see, this opened up at, so it says 2867, okay? And this is when like it switched to the next day, right? Let's see. Oh, sorry, 2854. And our volume profile, so the high, okay, the value area high was 2848, or is 2848 for the previous day. So what that means is that we opened up higher than what the value area is, okay? So if the value area high is 2848, meaning this is the high point for this 70%, okay? And we open above it, we open outside of that range, we open in this dark shaded area in the 30%, right? Not the majority, but the 30%. And then we come back into the value area range after open, right? And we close, here's our 30-minute candles. We close 2 consecutive 30-minute candles within the range. Then there's an 80% chance that we will travel the whole range to the bottom. Okay, the 80% chance. Now I had it marked. This is just so weird because I was watching it pretty thoroughly. So I must have just made a mistake. But I had it marked at 2817 as the low. That's not what I have here, which is fine. It's 2802. But it's not as if this trade has been refuted yet, right? And it's not like it happens immediately. So let's see if this plays out, because what we have, if we put this little marker here, the candles, there's an 80% chance, because we have had more than 30 or more than 2 consecutive 30-minute candles close under this value area, right? So here, let me draw this value area right there. Clearly, right, this has been resistance, 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 and it looks like we're losing it, right? There's an 80% chance that we will come down and hit this lower line. It doesn't mean that we're going to get a reversal. It doesn't mean we're going to continue on. That's not what that trade is indicating. What that trade is indicating is that there's an 80% chance we hit this line, right? And so we will see if that plays out. That's really interesting because I thought it had, but that's okay. There's still an 80% chance. So that's what we'll see. Now, is it guaranteed to happen? Of course not. That's why it's called an 80% trade, right? Because 80% of the time, that's literally the name of this trade, is because 80% of the time it does happen. But we have those 20% where it doesn't. But this is what's cool. Now, this one in particular, I'll admit, is not a very big range. So if it happens, it's not super impressive. to me, because we're talking about 1.6%. It's not a big range, but these ranges happen, and they can be very big ranges. They could be 5% ranges, right? Or 10%. So that happens. But why is this important? One, all of technical analysis is trying to identify where other traders are at. That's what we're trying to do. So we know that there are people looking at this and expecting it to go lower, right? So self-fulfilled prophecy or whatever, right? This is why it happens the majority of the time, because people see the setup, they know the setup, and they're expecting it, and they trade it that way, right? People are more likely to take out shorts, especially at this range at the top, right? Which is why it becomes resistance. If you're seeing the screen the screen share, you can see that once we broke down 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 attempts to get above that level, all failed. And now we are of the 1.6% move down, we've completed 1.08%. So we're 60% of the way there, which is pretty cool. By the way, you can always check out, if you're on the Twitter space, you can see the pinned messages. You can see the YouTube channel if you want to follow along, or if you want to participate. If you have questions, you want to ask anything, you can take that link and join in. And I would love to hear from you. Also, if you're in our Telegram, you can find those same links there. So, we want this to be an interactive broadcast. We want this to be helpful and for people to understand, really what we're talking about. So, anyway, so this was the setup yesterday. It was really cool. Like I said, I thought it had played out, but we were like $9 off. So that's okay. Let's see if we can get that extra $9 and hit this and make this 80% trade actually complete. So that would be really, really cool. But let's move away from that for now. Let's go to we have a request here. 2%. How's it going? You are able to speak now.
Yeah, I had a question. I was looking over your website.
Yeah.
And it was talking about bounties.
Yes.
Is that something different projects can offer for a way for people to earn crypto? And if so, do they earn list tokens, or do they earn the token in which the crypto puts up the bounty?
Very good question, man. I appreciate it. Yeah. So with our project, Crypto List, it's a listing platform that is just about to be released, and the bounties, they come as part of the listing, right? So part of the listing fee goes to purchase list tokens on the open market, which is one of the benefits for list holders. These are what's used in the bounty system. However, when someone within another project as earning these tokens, and then they go to cash out, they don't have to cash out in list tokens. They can cash out in Ethereum or any other token. So it makes it a little bit more appealing for projects.
So is List like a token launching platform?
So we're not a token launching platform. We're just like what we want to do is we're competing with CoinMarketCap and DEX tools. So that's our main utility. But the bounties is just kind of this independent utility that we've developed within our system. So it creates community engagement and kind of lets marketing funds go a little bit further, because people in the community can actually earn money for participating in these bounties.
Nice. Could you talk about your partnership with Wafer? Because that's actually how I heard about you guys. Are y'all gonna be on their platform as far as like CoinMarketCap information, or?
So when it comes to Wafer, we're still working out some of the details. I like Wafer a lot. We created our social media profile with their platform. It's Wafer Red. Am I saying that right?
I believe so. I'm not an investor in Wafer. That's one of the projects I had my eye on, but I heard about them through you.
Oh, perfect. Yeah. So they're good good team. We've had some conversations. We're trying to work out some of the details and see how we can work together. That's a big thing with Crypto List, is we just like to have you know, we like to work with other projects and see how we can work together, and just instead of just building competing tech. So yeah, there's definitely some potential there. We're still working out some of the details, but great team so far. I've really enjoyed getting to know them.
Awesome. I'll kick back and relax and let other ask questions. I don't want to hog everything.
Oh, you're good, man. Hey, I appreciate it. Thanks for listening in.
No problem.
Worldwide, what's up, brother? How's it going?
Hey, what's going on, man? No, I just want to throw in a little correction. It's Red Wave.
Red Wave. Okay.
Red Wave. Okay.
Thank you. Yeah, I knew it was close.
It's all good, man. I'm happy to see you guys working together and you guys being utilizing their platform.
Yeah. I probably need to be posting more content on there. We created a platform. It was cool, man. Let me tell you. They're like, hey, we can get you verified. And I was like, okay, hell yeah, I'll get verified. And they got the blue check mark, whatever. And I was like, oh, nice, man. I felt like a baller. The first time I've ever been verified on anything.
Yeah, hey, join the club, man. Hey, because I've been on there for a little while myself, and we're blue check mark too. So
Right on.
Kind of makes you put that puff your chest out a little bit.
Yeah, that's awesome. Well, very cool, man. Yeah, hey, thanks for that correction. I appreciate it, man. We'll have to catch up. Cool. All right. Perfect. Well, yeah, that's awesome. So that's good. That was just so if you're watching on YouTube, some of the interactions going on the Twitter space there. So yeah, appreciate that. All right, let's go back to the charts here and take a look. So I'm going to delete the volume areas. We have our target. Okay, so 2802. That's our target. And I'm actually just going to check this real quick. I want to see as far as exo charts if we have the same value area low. So just a moment. I didn't actually know I closed this down. So value area low 205.25. Okay, so if we're going with specifics, what I think is actually a little bit more accurate, so it'd be 205.25. So let me just change our little line here and post it up, and we'll change this coordinates. So 2805.25. Cool, and that's locked in. So we hit this line, we're good to go. We're all set. We're very, very close to it, like 14 bucks away. So that'd be really cool. But 80% chance says we hit that line. So, all right, let's take a look at the overall market. I have got some disagreements with some people, and I want to, that are looking at the market and giving us the whole view. And I've got a perspective I want to share, and I'm not. Look, we can't be so committed to our ideas that we miss bearish scenarios or we miss bullish scenarios. Obviously, these things can happen. The market can do whatever it wants. But look, there is a lot of information out there saying that we are in a bear market, that we're going much lower and all this. And it's like, okay, I can appreciate that perspective. I don't think that's the most probable. And I don't think the chart says that that's the most probable. It is definitely a possibility. It's definitely a possibility, right? Could Ethereum break all these levels of support and go below 2,000 and we find support somewhere between 1,600 and 2,000? This is absolutely possible, right? And I've got my numbers and my levels and I have it all mapped out. Is that the most probable scenario? I don't think so, and I don't think anyone can say that it is. So we're looking at the daily chart, but we're pulled way back. Okay, way back. Look at this. In 2000, Okay, the end of 2020. Sorry, the end of 2020. Okay, we started to get some movement, right? But we were $600 in December for Ethereum. 600. Okay, that was 2 years ago. Then start of 2021. Okay, 1200. Right? Let me see exactly. So 365 days ago. 365 days ago. So we were roughly 3,300. Okay, a year ago. Okay, where are we at right now? We're at 2819. We are closer. Okay, so let's take a look. So if we went to the all-time high from where we're at right now, 72%. If we went from $500 up to where we are right now, 426%. So if you take a look at where we're at now compared to where we are or were like 18 months ago, we're closer to the all-time high than we are the low or the average price at that time. When you look at market structure, we have when we went absolutely parabolic, and then in May we took and put in a high in the 4,000s, right? It was like 43, almost 4,400. Okay, we came back down. We went put in a higher low on a larger time frame. Okay, about 1750 or about 1,700, 1,800. Okay, then we went back up. We put in a higher high, just under 5,000. It was like 4,880, something like that, right? We come back down, and now we've put in higher lows again. So we have higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. Now, yes, if we look at Elliott wave theory, we could be seeing some downward waves. We have seen some downward waves, like we're obviously not at the all-time high. But what I want to say is on the long-term time frame, we are closer to the all-time high than we are where we were 2 years ago, which would be like $600, $500, right? And we're at 2,800. 2,800 is a big price. I mean, that's not cheap, and I don't want people to think that it's cheap. So as far as like a bear market, are we in a bear market? Not from what I just saw. How could we be in a bear market when we are we're 70% from the all-time high and almost 500% from where we were 2 years ago? We've consistently put in higher highs, consistently put in higher lows. I mean, so if you take a step back and you look at this on a monthly or a weekly chart, or I'm looking at the daily, right? But I'm like really zoomed out. If you zoom out, we're up there. Now, that doesn't mean, I mean, obviously, like what goes up must come down. So maybe, yeah, maybe we are going down. Definitely a possibility, but not on this time frame. So now let's zoom in. Now let's zoom in. So we're not talking about like the last few years of Bitcoin or Bitcoin or Ethereum, right? Let's just look at this year. Okay. So 2022, we opened it up at 36.77. Okay. And the low is 21.88, right? And we're sitting here at 2,800. So we're about the middle, not quite, right? But about the middle. So 30% up from the low, 31%. And we are 36%, roughly, what did I say? Hold on, let me see. We opened it up at, I gotta zoom out. What the heck? 36.77. We're right in the middle. Sorry, I don't know why things got so fuzzy. Okay, yeah, so 36.77. So from here to where we are is 31.89%. And then from here to 36.77, where we opened the year at, is 30.36. So technically, we're actually closer to where we open the year than the all-time low, right? The all-time high compared to the all-time low. We're closer to that. So we're right in the middle for the whole year, and we're in May. Again, is that bearish? I don't think so. I don't necessarily see it. Let's look at this channel that we're in. This is an ascending parallel channel, right? Until until it's not. So again, it's not to say we can't look lower. We can't have things. I'll tell you where I've got buy orders right now. I have a buy order. Here, let me pull it up on my phone. So I have buy orders because I hope and don't trade don't trade my orders. They'll still get you wrecked because it's my thought out strategy. So 27.39, I have a buy order. I have a buy order at 26.80. Again, not financial advice. This is what I'm doing with my risk management and mitigation and take profit strategy. Okay, these lines right here, I'm hoping I can get them filled. Why? Because it'd be great to get better positions. This is the most likely scenario, is that we come in here and we start hitting these beep, beep, beep. Maybe we drop down and then we come back up. The most likely scenario is that we find support in this range where I've got my orange lines. That is the most likely scenario. Not a bearish scenario, not where we're going down and we keep going down and we're going to 1600. That is so out. That's so far over your skis. I don't think that makes any sense whatsoever. Again, it's not to say that it can't happen. I know I've repeated myself many times, but how can you justify this? I mean, because we're in a local downtrend, like because for the last month it's kind of been like this slow bleed trying to find support, or because we're not at an all-time high. We're really not that far from it. I mean, we are in a way, right? I mean, it's not like it's 20%. I mean, we're 70% from the all-time high. That's what we would need. But these things happen. This is crypto. But we didn't. I mean, look at where we found support. We found support well above 2,000, whereas last year we found support at like 1,700, almost 1,600. Do we break 1,600? Or break it? Yeah, we did. The low is 1697. So we're significantly higher. Significantly higher. Let me just map this out. 30% higher is where our lows are. So if we're being objective, I don't see it. I don't see it. How can we be so convinced that we're in a bear market, a bear trend, things are looking so bad? What are you talking about? I mean, I don't see it yet, right? Like, here, let me map this out. Let me map this out. I'm gonna remove this, get this. Right, look at this. Lower low. This you could argue is a higher high. I don't. I say that this is a lower high, but then we have a higher low, a higher high, and if we can put in support here, this would be another higher low. What would that mean? It would mean on a long-term time frame, we have had a market structure change, and it would be technically defined as an uptrend. So we are in an uptrend technically on like the weekly and monthly charts. Okay, so if you pull out and pull way back, we are in an uptrend. So let me get this. All right, so we pull back and I'm going to hide this. Okay, so from here, higher high, higher low, higher high, higher low, higher high, higher low. we are in an uptrend. Now, does it want to peter out and start coming back down? Maybe, right? But again, we like, it's just, anyway, it's becoming a bit annoying to me. So I don't mean to like go off on this whole thing, but when people are saying, "Oh yeah, like this is happening, we're going lower," whatever, it's like, bro, you can't justify that. Like you can't actually define that right now. We're consistently higher highs, consistently higher lows. We're in an uptrend. We're closer to the all-time high than we were 2 years ago as an average price, right? We're closer to 4,000 or 5,000 than we are 500, which is where we were 2 years ago. And yeah, like we've had some price come down, some price movement come down, but I would be absolutely shocked if we didn't go back up to 4,000. Totally shocked. And when we get to 4,000, what happens? I don't know, right? We'll have to see what we get when we get there. But I'm definitely planning on 4,000. I think that that's the most likely scenario. If we go to 4,000, is that still bear market? Are we still, like, I still think not. So anyway, it's just I want to point that out because I know things are slow, but this is how it works, and this is very, very good for micro caps. When Ethereum is slow and boring, micro caps pump. That's what happens. So we could be entering into an alt season. I don't necessarily think that that's the case. I actually think that it is Bitcoin's season, and it is Ethereum. And then we'll move into, like large caps or mid caps or whatever, and then, continue on to smaller projects as profits are moved out. Real quick, let me zoom in on this because we are within a couple dollars of hitting that 80% trade. So we had it pinned. We went very, very precisely, and I think we just hit it. Nope. So 28 was 28.5.25. So we're very, very close. There it is. 80% trade complete in front of our eyes. Perfect. Absolutely beautiful. Now, it could continue to go lower. It could find support and reverse. Doesn't matter. That's not what the trade is about. The trade is about that we closed under the value area, and live, we got to see this actually be completed. So 25.25 is the value area according to EXO charts, and it's complete. So that's really cool. That's really awesome to see. I hope we go a little bit lower because I told you I have some buy orders a little bit lower. It would be great to be filled. So 27.39. We got a ways to go still for that first order to be bought in, but would be great for me. Again, doesn't mean that this is bearish. Matter of fact, I love seeing single prints like these single print candles. They're going to be filled. Like they're going to be filled. We're going to be going to 2,900 again very, very soon. Yeah. So anyway, I'm excited. I think this is very, very cool. It's a great opportunity. And if we can get back down and we can lose these levels and maybe hit the bottom of that parallel channel, we have a great buy opportunity. And I'm very excited. But it's cool to see that what we talked about yesterday play out live today. So that's really, really cool. We hit the target. And, like I said, it wasn't very big. It was like 1.6%, but they don't call it the 80% trade for nothing. We definitely got that. So, all right, we talked about that. We talked about the market, why we shouldn't be feeling overly bearish. We should definitely have a bear scenario in mind, and I'll just map that out real quick. And then I want to just show you real quick about I always get this mixed up. It's the VPRV because it's a cool tool and it's right in line with what we were talking about. Okay, But so bearish scenario. Here's what I would be looking at. First off, those lines that I have, if I get stopped out, my stop is 2,400. Okay, so you saw where my buys are at, and then I've got my stop. If I get stopped out, guess what my percentage is of my total loss? Okay, 1% of my trading portfolio, because I have proper risk management. I never, if I lose a trade, which I lose trades because everyone loses trades, you have to lose trades. I mean, you have to manage risk because you're going to lose trades, right? Then I will lose 1% of my trading portfolio, which means I get to live to fight another day. And if I get stopped out, I would be looking at 2250 as the next thing. So if we don't get stopped and find support, let me see, let me get this mapped out. Because I think my lowest buy, I can't remember, 2604. So I'll just kind of put it right here. If we lose this level and we continue to come down, right, and we don't find support, then I'm looking at about this level. I'm looking at 2250. Why? Because we have a naked point of control right here that hasn't been tested, and it's a weekly point of control, meaning for this whole week, this is where the most amount of volume was traded, and it hasn't been crossed yet, so it's naked. It hasn't been tested. And then if we lose that level, I would be looking with a range of, let me get my cool thing. I would be looking of a range where we do our Fibonacci retracement. It would be our global golden pocket, and it would be somewhere in here. Okay, so we are going to find support unless crypto's just dead, just completely over, and we don't care anymore, and no one wants to buy a $1,600 Ethereum, right? We either find support here or about where we are right now, okay? Or we find support about 2250, or we find support in the golden pocket, golden channel, somewhere between 2000 and 1600. We'll narrow that range down once we get closer, and kind of see. But those are my bearish scenarios, right? If we don't just move up from where we are right now, I see four options. We move up here, we move up a little bit lower, we move up there or there. That's what I'm looking at. And then it's just a matter of how far and taking profit and managing your trades, which we'll get into over the coming weeks. But no, I don't think it's justified to be so bearish like so many people are right now. And look, if you're trading, here's the other thing. If you're trading, you're investing into projects, you understand how to read Ethereum and how to read Bitcoin, and you can see the market and you can participate in this, right? You can make just as much money trading in a downtrend as you can an uptrend. You can short the market. You can, like, there's still just as many opportunities, if I mean, well, I'm not gonna say if not more, but there's still just as many opportunities. It's different to trade a downtrend, to trade a bear market, than it is to just trade a bull run where you just buy and then you let it go, and then if there's a retracement, you buy again, right? That's a little bit easier. There's some more technical stuff that you have to know as far as trading, but you can make just as much money, and you can have these opportunities. Like if Ethereum comes down, and we really do, we're losing these levels, and we go below 2000, I'm buying all of my favorite projects with as much money as I can. I'm dead serious. Like micro caps. Am I panicked at all? No, it would be an incredible opportunity, because I really think that the likelihood of Ethereum going to 500 is really unlikely, at least before we could get into profit again. You know what I mean? So it just, anyway, I've been on this rant for a little while now. Let's get to what I want to talk about and what I set out. This is an indicator. Okay, let me tell you something. Usually I hate indicators. I usually hate indicators. Look at this. So this would be, if we went to the golden pocket, this red line, this is where the most volume has been traded in this visible range. Okay. Here, so this is called, let me search. So VPVR. So volume profile visible range. Okay. So what we're looking at is where the most volume is traded. It's exactly like that other tool that we used yesterday, but this one is cool. It's on the right hand side of the screen and it auto adjusts to what you're looking at, right? So this is kind of neat. I wasn't planning on this, but it is cool to see that with going back to September of 2020, the most volume was traded at $1,800. That is where the most amount of money was traded, from the all-time highs to whatever. So we're talking about a price range of $365 for Ethereum, all the way up to $4,868. Between that whole range, the majority of trading was done at $1,800, right? I would imagine that if we had a bearish scenario and we lost the 2000s altogether and we broke in here, because I'm going to measure this out too, because this is really cool. I think you guys will appreciate it. You're going to know exactly where to buy. This is not financial advice. This is just entertainment. Okay, let me move this. Excuse me. Sorry about that. It's probably rough on the ears. Okay. We have a golden pocket. This is the all-time, oh, not the all-time low. I didn't catch it. Perfect. Okay. So let's just measure this whole thing out. Wow. So we're looking way back into the past. We're looking into almost 2018. We're in May of 2019, right? Still, most volume was traded $1,786. That's incredible. So for the last like 3 years, 4 years almost, we're looking at 1,786, almost 1,800, right? As where the most amount of money was traded in Ethereum, full stop, right? And this happens to line up right within this golden channel, this golden pocket, which would be the all-time low to the all-time high. We reduce it down. We get this range where we should find support. We have this naked point of control, or this high volume area. I would definitely be putting everything that I have into my Ethereum-based projects and Ethereum if I could ever buy it for $1,800. I would just buy. I would just buy. It doesn't necessarily mean we move to an all-time high. Typically hitting these levels, like where you're talking about the global retracement, it actually typically does mean an all-time high. But so look, if we're so bearish, we're not that far from it. We're really not. We're 30%, 40% from this range. So 30 to 40%. I mean, it would be crazy, but I would have some liquid cash on hand, and if you could, I'd buy it up. Why not? Why not? That's pretty amazing. Look at this. This is kind of cool. I didn't plan any of this, but if you look at where this value area high is, look at the last uptrend that we had. It came up 35, 90, 94, right? Roughly. This is kind of a range. But that's where we came up and we hit that. We got rejected from that. That's pretty cool. Volume area low is 1,381. That would be incredible to hit. There's some low volume nodes at 800, a single print candle at 800, just a daily. Yeah, I really don't think that I'm even thinking about under 1400 right now. So yeah, I'm not thinking about that at all. We're 30%, between 30 and 40% from what would be the absolute strongest support level that we can map currently. Um, so it's not like there's that much further to go if we were to go there. But currently, we're in an uptrend. We're putting in a higher low. Um, yeah, I think we're good. I think we're good. So this tool right here is kind of cool. Let me get rid of these distracting tools. By the way, if you're on the Twitter space, you can click the link and you can be taken to the YouTube video. You can also join in and talk. I got Loco Scotch. You want to come in and talk? I see that you're here, so I'll add you to the stream. How's it going? Let's see. Unmute your mic. Oh, they chose to mute yourself. All right. If you want to unmute yourself, great. Or otherwise, you can just be in here and listen. So, perfect. All right. So going back to the chart and this tool. This tool is a really handy tool. I don't like indicators, but this is a cool indicator because what it does is it doesn't tell you when to buy. Any indicator that tells you when to buy or, hey, these two things cross, just buy this. I'm very skeptical of it. I've seen it before. I've lost a lot of money trying to learn these things. This is, in my view, the most reliable way to do technical analysis and to understand charts, right? This is, you got to use what the big boys use. So this is a cool tool because what it does is it just gives you a constant volume profile. It just, you can look at a set of candles and you can know instantly the value area low, the value area high, the point of control. You can see low volume nodes. You see this over here where it dips in and it's like this big trough. This is a low volume node. This is where we could expect there's not a lot of trading because historically there hasn't been, right? So you might get some resistance. Also, if there's another peak, like we've got a peak here, have a peak here, right? So we could see some reaction and some volume off of some stuff like that. But anyway, this is a really cool tool. So as far as indicators go, I don't often say add indicators, but this is one that you should have. You should have the weighted, so the VWAP, which is the volume weighted average price. I like to use one with an anchor. Usually just run that on the week, and we can do like the month. Actually, let's do a year. Where are we at for the year? Okay, so this is the start of the year. Come down here. So this is the average price, the volume weighted average price, and we're well under that price right now, which is somewhere around 29.68. So these are some of the indicators that I say that you should have. I think they're good indicators because it doesn't tell you what to buy, when to buy, or anything like that. It just gives you an understanding of where other investors are, right? So low volume node, this is really cool. All right, let's take this into consideration. So let's go here. So 27, so we have a low volume node about 2,700. This is actually a weekly level. Did we see, by the way, how amazing our weekly hit? Let me just zoom in on this. I will brag about this. We went through, one of the first things we did, and I'm gonna hide this just so it's nice and clean. Let me hide this as well. One of the first things we did was horizontal support, right? Support and resistance. And we went through and mapped out daily, weekly, monthly levels. Okay, we've been talking about this weekly level for a little while. Said, oh, if we hit it, we might get a reaction. We did. And you know what? We didn't hit it, like we didn't actually touch it, but we were within, so we have it pinned at $2,710. and we got a low of $2,712.85. You tell me what other methodology, what other system can get you within $2.85 to the low or to the high, because we've had some good responses here. Look at this. This was another weekly level that we got perfect resistance from. We tried it 4 times, 4 separate days, 1, 2, 3, 4, and we got rejected from it, right? At 35.21. This one right here was less effective, but on the way back down, we hit it once, we tried to hit it twice, and we got rejected, right? But this was perfect. So if you're looking to trade something with such high volatility, and where do I buy, what do I look at, and you have this level here, you're looking here, and you were able within a range of $2.85. That's incredible, right? Doesn't mean it's gonna hold forever or anything like that, but it's great. And if you were to scalp trade this, meaning you're just doing a quick trade, right? Look at the opportunity here. It was 6.28%. 6.28%. So if you had a trade, let me just see here. Well, matter of fact, this is, like I said, I've got a buy here, and I've got a couple buys lower, and I've got my stop loss at 24. If I get this trade that I want and I'm successful and I can sell out at my take profits and everything, my ratio I think is 6 to 1. 6 to 1. So whatever I'm risking that I'm going to lose, if I make my trade, I'm going to get 6 times more than what I'm risking. Do you know what that means? That means that I can lose, I believe that means 60% of my trades and still be profitable. I think that's right. No, that can't be right. 6 out of 10, hold on. Yeah, I believe that is right. So in order for me to maintain like a break even, I have to win at least, I think, 40% of my trades, something like that. Anyways, what I'm saying is you don't even have to win half your trades. So if you know technical analysis, right, and you pick good trades and you're very disciplined in your trades, and you say, okay, look, we have a weekly level, it's the bottom of a channel, we're trading with the market, as far as the market structure, these types of things. And you're like, all right, the probability is that we're moving in this direction. Even if you are like half, matter of fact, here, I'm sounding stupid. I did the math last night and I sent it to my trading partner. Okay. Here's what we were looking at. Okay. With our current trading strategy of not accepting anything lower than a 3 to 1, meaning if we win, we did 3 times our money, and if we lost that one, right? So each win gives us 3 free trades. Okay. That means that we could trade with a 30% win percentage, meaning we out of 10 trades we only win 3, and we would actually still be ahead 1.81% of our trades, even though we lost 70% of our trades. Is that insane? Because that's what proper risk management, proper ratio trading, meaning you're not taking a trade that's 1-to-1, or not taking a trade that is 1-to-2, meaning you're always going to win more. You're going to have bigger wins than you are losses. And then understanding technical analysis and putting the trades in and then just letting them play out to completion, right? If you can do that and at least win 30%, you will have you will be in profit. It's so as challenging of a thing as this is, if you can be mechanical, if you can be robotic in a sense, and just say like, these are my rules. Okay, and this is what I do, just so that we're very clear, right? It's just me and my friends. We were going through because there's something that we'll be announcing shortly. We'll be announcing this. We were putting projections and profits and losses together and kind of looking at stuff like with the like most basic rules, we would be able to lose 70% of trades and still be in profit. Still be in profit. And it's just crazy, right? So it's an amazing thing when you grasp it, because people can make money with this, right? Knowing the chart is part of it. Knowing the discipline and having the discipline is the other part, and that's the most challenging part. So anyways, I'm way off base. I went on this whole lecture thing. I didn't mean to do that. It's really a cool thing. I'm obviously passionate about this because there's so much potential, and there's there's real money to be made here. And I'm not trying to turn everyone into a day trader or swing trader or anything like that. So, but even if you can just have a better understanding of how markets move, you can make better investments, right? Um, but yeah, this is it's all about discipline. It's all about having a plan, sticking to it, putting letting things go to completion, keeping the emotions out of it. Because if you're very disciplined and methodical within what I'm trying to share and teach, and you're robotic, you don't even have to be that good at technical analysis. You can lose 70% of your trades and still come out in profit. What else could you go out in the world and do where you lose 70%, right? Well, maybe sales, actually, right? It's like a numbers game. I've been in sales positions where it's like I get rejected way more than I had people say yes to. But when someone said yes, it meant more than those losses, right? So maybe in the same way, we could think about it like that if you've ever been in a sales position. Um, it's kind of a numbers game. Well, it is. I mean, purely speaking, it is a numbers game. Trading is a numbers game, right? And if you have the proper risk management, the proper discipline, and only take trades that give you the right look and the right ratios, you all you need to win is 30%, and you're in profit. Pretty crazy. So I hope that this was interesting. We got to see the 80% trade play out live. That was very cool. We got to see that come to completion live on the stream. You got to see the new tool, which this new indicator, the VPRV. So you can add this to your trading view. It'll tell you good points of resistance, good points of trading, low volume nodes, value area highs, value area lows, and things like that. So I hope that becomes a tool that you use and is beneficial. We were able to zoom out and take a look at the market and really ask the question is, how justified are we being so bearish, right? And granted, it feels bearish, right? It feels like we feel it. It feels like the market's down because we've had a month, a month since I mean, actually a little over a month. I think that we peaked, we put in the high April 3rd. So 1 month of this downtrend, this slow bleed, right? It's fatigue. You know what you need to do? Go for a run, go out in the mountains, go I don't know, whatever it is that you like to do. Get away for a little bit. Come back, objectively look at the chart and be like, "Oh, we're actually at 2800. We're much closer to the all-time high than the all-time low, or the average price, not even the all-time low, but the average price 2 years ago. We're holding higher. We continuously are putting in higher highs and higher lows. And I think you'll realize and agree with me that the people making the case for a bear market have quite the job to do. And I know that there's a lot of other tools, and the AMAs and the EMAs, I mean, the crossing and the Bollinger Bands and blah blah blah. I get it, right? But these things aren't perfect, and they can't predict the market. And if it was that easy, everyone would just be doing that, right? I'm telling you, trading is one of the most complicated, complex, and challenging um, sports. I'll really say it's a sport that exists, right? It's a mental game, just like most sports. But if you have the right discipline and you have the right knowledge and you spend the time, you put in the time, you work on yourself, you work on your knowledge, you can be great at it. Okay. I'm telling you, two lines crossing does not make a bear market. It just doesn't. So we'll see. I'm going to end it there. Thanks everybody. I really appreciate it. Thanks for listening to me rant and go on for a while, but it was very cool to see that 80% trade play out and learn about these tools and kind of take a bigger look at the market and step back. So everyone, you have yourself a great day. Make sure you check out cryptolist.com. We are nearing the launch of our trading platform, which is going to be really, really amazing. You'll be able to trade, you'll be able to chart, you'll have educational information available to you and security information. So it's not just a chart like this, like what we have on Ethereum. But if you're looking into micro caps or mid caps, you'll be able to know the security steps that projects have taken. You'll be able to see if a team is doxed, if they're using a multi-sig, what the taxes are, what the tokenomic breakdown is as far as how much is going to marketing, liquidity, development, things like that. You can see how the tokens are distributed. Is there one holder that holds 80%? Right, of these tokens, or is it a pretty good distribution? You'll be able to see detailed features within the contract, and it'll highlight and give you a risk assessment if some of these features are typically used in malicious codes or honeypots. It'll tell you if it's a honeypot, right? Anyway, what Crypto List is and what we're about to release in the coming days is it's going to be a game changer. It's very cool, and the charting feature is just one aspect of what we're about and what we're building. So make sure to check that out. Everyone have a great day, and we will talk soon. Thank you.